Welcome. This is T2 Lesson 1, Lesson 24 overall. Today we cover the mistake almost everyone who studies charts still makes. What we'll learn: first, why a high win rate can still wipe out an account. Second, what risk-reward is and why it matters. Third, how long-term survivors structure their trades. Just this one idea unlocks the puzzle. I win a lot, so why is my account shrinking? If that sounds uncomfortably familiar, drop a comment. We'll dig into it together. Keep the Bitcoin daily chart on screen while you listen.
퍼스트 퀘스천. 트레이더 A 윈즈 90% 오브 더 타임. 트레이더 B 윈즈 60%.
1 year later, whose account is bigger? Most people say, obviously the 90% person. That's the everyday answer. The same instinct that chases every green day on the Nasdaq and ignores the bigger S&P 500 picture. Historically, though, the 60% trader is far more likely to be ahead.
Surprising, right?
And the 90% a trader blowing up the account? That's a pattern that repeats.
Why?
The reason sits in human psychology. Most chart beginners do this. When a trade is a little green, fear of giving it back makes them sell immediately, like treating a $3 coffee profit as money that has to be spent before it disappears. When a trade goes red, they hold, telling themselves it'll come back, and in the worst cases they average down, buying more to lower the average cost. E.g., you bought at $10,000, it drops to $9,000, you buy again at $9,000, so the average becomes $9,500. The result: many small wins plus one large loss. You feel like you're winning, and still end up behind. Let's make it concrete. These are not live results, just a made-up example, so the math is clear. Win 9 times at $100 each. Total profit is 9 times the low 100 equals plus the 900. Then one average down loser costs you $1,500. What happens?
매스. 달러 900 마이너스 달러 1500 마이너스 달러 600.
9 wins, and the final number is still negative.
윈 레이트 90%.
Net, down $600. That is the win rate trap. Winning often and making money are two different problems. The Fed can hike, the S&P can chop, and the same trap still empties accounts. People who stay in the game for years do the opposite. When they're right, they let the trade pay. When they're wrong, they cut fast. Example: take $400 on a winner, cut losers at $150.
리스크 리워드 달러 400 나누기 사인 달러 150 근사 2.7 곱하기 사인.
Your average win is about 2.7 times your average loss.
It A 60% 윈 레이트. 매스. 6 윈즈 곱하기 사인 달러 400 마이너스 4 로시즈 곱하기 사인 달러 150 달러 2,400 마이너스 달러 600 플러스 달러 1,800.
Only 60% correct, and still $1,800 ahead. The core: long-term results are driven less by win rate than by how big wins are versus losses, your risk-reward ratio. So, how do you lose small and win large? The key is entering only from good locations. Where and when you enter sets the risk-reward before the trade even runs. On this Bitcoin daily chart, those locations really do exist. Starting next lesson, we'll learn how to find them, and that is the heart of reading a chart. Enter from a good spot, and you can naturally place a tight loss and a wide target. The same idea whether you're trading Bitcoin, an S&P 500, or a Nasdaq name. One sentence to keep: I am not the person who maximizes how often I win. I am the person who manages how much I make when I'm right versus how much I lose when I'm wrong. T2 Lesson 1 Wrap-Up. First, a high win rate with bad risk-reward can still shrink the account. Second, most beginners bank winners too fast and hold losers too long. Third, Long-term survivors do the opposite. Next lesson, we zoom out. Why charts keep repeating the same patterns. Today's foundation has to be in place before that layer stacks. If this helped, please subscribe and hit like. Thank you, sincerely. Look at your own trading and ask, am I doing this too? If something clicked, drop it in the comments.
See you next time.
This lesson is for education only and is not specific investment advice. You alone are responsible for every trade you place.